But you know, guys, if I know you guys have been following, some of you guys show up every single day, so you guys know I've been talking about silver now for quite a while. You know, I've been talking about gold for quite a while. You know, I've been talking about some metal miners for a while. So, you know, this isn't new to most of you guys, but you know, I was doing a deep dive this weekend as to why, you know, they're moving up so well, you know, right now. And obviously, I know that it's because of the dollar going down. You can just clearly see the inverse relationship. So if the dollar, you know, loses value, something has to gain value, right? But then when gold really begins to outperform lumber, you know, for an extended period of time, that's like the recipe needed for something ugly to happen. Yeah. Yeah, this is your first time? First time speaker? But yeah, I mean, it's just good to be aware of. It doesn't mean anything has to happen, but what's up? I'm watching a couple of metal names like AA, CENX, and I'm watching the crude market for oil. I'm watching the energy sector. So I'm still short a couple energy names, and I'd be looking to add if they actually break down here. You know, they're gapping up again because of crude, so. But, you know, it's not like they're performing well at all. You know, basically over the last 5 days, ever since XOM gapped down, you know, it hasn't been able to reclaim that gap. And, you know, despite what crude's doing, despite what the market's doing. So I'm still looking to short some more energy, but it has to be on a legit breakdown. You know, weed names were acting well, but they're kind of a little bit gone for me. You know, obviously China names just keep gapping up. They don't give a shit. It's hard to get situated in that crap. I mean, I mean, you can't even fucking buy the thing. It just gaps and then it doesn't really move too much, and then it just gaps up hard and then flies, and it's hard to buy it out of a massive gap up. But I don't know. Fucking hard. It's annoying. Yeah, well, it's either gapping up or gapping down. And again, I just refuse to chase. I need something to go through my pivot. I mean, I wanted Baba at 77.36 was my alert, but just gapped right over it. And then, it put in this incredibly tight red day. And so that's like no man's land. So you buy the gap up, but you're in no man's land. I mean, how can you hold that overnight? You don't know it's going to gap again the next morning. You have no idea. And so essentially, if you bought it on this day, it's a full size gamble. It's a full gamble. So I don't really like gambling now. Had it opened up at like 77, then started pushing through 77.30, and I would have been able to buy it, and then it closed at 79, and you got like a little $1.50 cushion. Okay, then you hold. But just gapped right over it and then did nothing. And then it gaps again the next morning. Unless you were ready to buy that gap up again, which I wasn't, 2 gap ups in a row. It's power, but it's also super risky, and it's hard for me to do. I don't know. SGML had some news. I didn't look into it, but I did see it's on my gap scanner. So all the China names gapped. Good luck, guys.
LTUM. ENSC, 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 ENSC. SHPH. SHPH. NBLD. 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 XCPL. NUWE. SXTC.
Choppy.
Stiff, DRMA, Vibev, KAL, BTV, DS, RMED, RELI, QTT, QTT, ATIP, ATIP, PT,
And we'll see.
RMED, 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 Kern,
We'll see if this AA sticks.
IGC, NBLD, NBLD, NBLD,
Yeah. Yeah, semis are acting way better.
NBLD. SXTC, 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 SXTC. SXTC, SXTC, SXTC.
That sucks.
DRMA, sent. VIVK. VIVK, VIVK, VIVK. VIVK. BT. NBOS. DRMA. 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 DRMA BT, BT. BT. BPAZ. NPRFF.
You know, what's funny is I set an alert on CPNG against this 50. It held the 50 last time it came down to it pretty cleanly. And I set an alert against the 50 to see what it does down here as well. If you shorted it, nice short. But believe it or not, I was thinking to see how it acts down here for a possible long. But we'll see. I don't really want to buy a dip. I'd rather buy it as it turns back up, tomorrow or another day. CPNG is just building a stage 1 base here. Yep, SHLS, another one of those. I set an alert on it at the gap fill down at 2350, and I just wanted to see it, what it would do against the gap, and then I just didn't buy it on Friday. As it did a little undercut rally or back through that pivot, 2350 as it was going back up wasn't such a bad spot. It reclaimed the 50 on the daily. Yeah, it's hard. Yeah, gaps make it difficult.
CNE what?
Manu is not something I would take up here. This is extended from the 10, never even pulled back and found support on the rising 10 or the 20. It's not something I would personally take. I mean, it's up 70%, and it hasn't really flagged out long enough. This is not a setup I'd ever take personally. Oh, nice. You got AXSM? Yeah, that's a good one. If you bought it on the EP day, not bad.
COSM. COSM.
This one was better to buy off of against the 50. About $54 right in here. So this thing bounced, and then it pulled back, it found support on the rising 50, and then it took out that next day's high. So this one is just showing you it wants to go higher, but it's hard to get situated in these things and buying these massive gap ups. It was on good news, so this one would have been a little bit easier to do. But right in here was, for me, a better spot. But yeah, the setup that I see best is like the one that I'm seeing as possibly one of the easiest trades for me is just short energy. It's the only sector that hasn't rallied over the last few days, so it's showing big time market weakness. Big time. When stocks go up, when the market's going down, you should pay attention to, because they're showing you they're incredibly strong, and stocks that do nothing when the market's ripping higher is relative weakness, and you want to pay attention to that too. You have no edge in COSM. There's nothing for me to do there. Yeah, Chewy's another one. Yeah, I had an alert on this one too. About 42.50. Right over this neckline, basically, on the hourly.
BBRRF.
But I'm looking for the easiest trades right now. And the easiest trade for me right now mentally is short energy. I mean, I'm not going to knock these things down by myself. I can't get short, a million shares or more. So, it won't be me knocking these things down, but, the relative weakness is pretty obvious. So we'll see. We'll see what ends up shaking. But, I personally believe the move in energy is done, at least for the next few months. So, there's a big dislocation between the price in crude and the energy ETF. If you've looked at how well crude and XLE have gone together all year, and then now look at crude and realize like this thing's only a few percent higher than its 52-week lows, and then look at XLE still up 60% on the year. So ideally I should be long crude as well, but I don't really want to be long crude when I think that it's got to probably come down to 70. I'd rather just short energy, but really the trade is short energy, long crude. That's like an arbitrage trade, and just doing a bunch of studying on all that this weekend and how you're supposed to play it.
SLBDF.
CELH is another one. The buy spot on CELH was $96, $96.30, right here.
Duo.
Thing washed out and instantly bounced, and it was right off of the 200 on the daily. And then it took out that next day's. It took out the previous day's high. That very next day on 11/23. 96, 97 was your entry, somewhere in here. And you should have sold some, probably through all-time highs, right up here. Sold a piece. But for now, there's nothing to do with it. It's not a setup. It's a cup and it could form a cup and handle. But I won't be playing it right now.
UXIN.
It could keep going too. Yeah, fundamentals are awesome on Celsius. My first buy on Celsius was on this day down here. Was on 7.5 at 67, 68. I had like a 67.30 average in here. On 7.5 was the first day I bought it. And I played it pretty well. But now I don't really see a setup here. Like I said, I'm trying to go for the easiest trades right now, and I did a lot of studying this weekend. Tons of studying this weekend. And I just don't see a reason to be long energy, so I'm shorting it. What did I study? Well, no, I studied the relationship between gold and lumber all weekend. Yeah, that's what I actually studied. And what I learned is that, how do I put this? So like if you said 1 + 1 = 2, and you looked to the right hand side of the equal sign, you would see that it equals 2. But I want to know what it is that equals 2. Like, how did we get to 2? Or if I said to the right hand side of the equal sign is 4, how did we get to 4? So really, you got to look to the left hand side of the equal sign. And when you look at gold and lumber, all the things are there. All the again, the SPY's pushing back up above the 200, but lumber isn't cooperating, and gold and silver has been really strong. So when you see gold and silver that strong, and the dollar's coming lower and lumber's not reacting, our dollar's losing value. So all the things that you would need for a ugly black swan event are there. So you don't want to see gold outperforming lumber like this per se. So everything there is needed for an ugly move down again. It'd be one thing if our markets were going higher and lumber was healthy, right? Then you'd say, okay, well, the market's going higher, lumber's nice and healthy, homes are being built, interest rates are pretty low. Problem is interest rates are high. So nobody's going to be buying homes right now. I mean, if you were, you'd be a total dumbass at 7%. So nobody's going to be really buying homes. So if nobody's really buying homes, it's telling you about the health of our economy, right? Regardless of what the SPY's doing, it's like a leading indicator, lumber is, about our economy. So, part of the reason that, things are so rough is because inflation's still high, and one of the biggest players in inflation has been energy prices. And again, if you track crude oil versus the energy ETF, and you plotted them both on one chart, you would look like all year they were moving together, and then somewhere in the middle of the year, crude started coming down and the energy names continued to go higher. So when you have both of the charts next to each other, plotted next to each other, you'll realize there's a big dislocation in the two charts. So that's called an arbitrage trade, and you know that over time those two charts are going to meet up again. So really, the proper trade is supposed to be, you're supposed to be short energy and long oil, because the theory is if energy ETF is going to be this high, either crude has to go higher or energy names have to come lower to match where crude's currently at. Because let's just say crude goes down to 60. Do you really think that, ExxonMobil and Chevron are going to be up where they're at right now? No, because in the beginning of the year, the barrel was 130, 120, 110, $100 a barrel. And so they're making profits on $100 a barrel, right? Versus now it's $80 a barrel. So their earnings reports are going to be reflected at $80 a barrel, meaning their profits next quarter won't be the same thing that they were in Q2 and Q3. And again, I'm sure the big boys already know this, and I'm sure the big boys already do plenty of arbitrage trades. So, it's how you're supposed to properly play it. But I don't want to be long crude, because I think crude's going to go lower myself. I think crude's going to come down to 70. And if that's the case, I just believe energy's going to roll over. But again, the hell do I know? All I know is that this is a flag, and it's building lower lows, and it's got this really nice little neckline down here. If it breaks, it won't be pretty. XOM, same deal. It's already kind of breaking below that little trend line. CVX a little bit stronger, but, hanging out. And then you start looking around the market, and you start saying, okay, well, what's the other pieces doing? What's like the mid caps doing? Oxy's already below the 20 and rejecting. DVN doesn't look too great. It broke down on earnings big time. Broke down on earnings big time. And, what's it really been doing? It's just building out this flag. And then you've got this, like, little bottom neckline. And, it can get nice and tight right underneath this area and then break down. PXD, a name that is the best yielder in the entire market, has already basically been going down, lower lows, lower highs, for a month. So it couldn't even make new highs like something like ExxonMobil or Chevron. Those two went on to make new highs when all these things flagged up. They made a move up, they flagged, and then PXD, which is like literally one of the best yielding names in the entire market, meaning They make some of the most money in the market, and institutions still don't want them. Hence the reason it's lower than October 19th's breakout. So, energy's weak. Jerome Powell started talking, and energy did not, break higher. You look at XLE, and you look at it on an intraday level. Jerome Powell started speaking, and this was on 11:30, and everything was kind of just going lower. And then Jerome Powell started speaking at 12:30, and everything ripped, right? Except what couldn't XLE do? Break its intraday highs. Where something like just look at Microsoft, for instance, on that same day, right? These things are all kind of breaking down, and then Jerome Powell starts talking, and what does a Microsoft do? Flies. Now what's the difference between Microsoft? It's already been beaten up quite a bit, but it starts flying and breaking its intraday highs. I took a position on it, but you guys get my point, right? It's like some things were able to break their intraday highs, and a lot of things, pretty much everything in the energy space wasn't. So if the market's flying and energy's not following, it's weak. It's pretty obvious it's weak.
CNTG.
Yeah, I had a 403.80 pivot on SPY. Just pre-market lows, basically. I was looking at this area. I had an alert right here. Below that was the breakdown spot for me on an intraday level.
5F.
So yeah, I didn't want to get too aggressive going long on anything when the market's been ripping. And again, just studying, history, hopefully will put me in the right place. But like I said, getting aggressive right now isn't necessarily my cup of tea. Market's got some proving to do. Not to mention, I'd like to see lumber do better. It sounds stupid to say, but if our market's just ripping higher and ripping higher and ripping higher, that's great if we were in a better, healthy economy, right? Otherwise, it's like I doubt the move. Like I'm suspicious of the move when our economy's so weak, and lumber is the thing that lets us know how strong or weak our economy really is. And like I said, it's something for you guys to study. I understand why gold and silver would go up. It goes up because, the dollar's losing value. If the dollar in your pocket's losing value, people are going to start scrambling and saying, man, this, the dollar's going down. Like, what's going to hold its value? It's going to possibly be metal, copper, silver, steel, lithium, anything. Anything that you can drop on your foot and it would hurt. That's what'll hold its value. I hope that makes some sense. But like I said, if gold starts stabilizing a little bit, even though it pushed up, that's totally fine. But if gold stabilizes and lumber starts to go higher, which is good, that's like a leading indicator that the economy's strengthening. Maybe homes are being built. Home builders start buying lumber. Because they've got requests for homes being built. Interest rates kind of start coming down, or the Fed pivots and stops raising interest rates, and our economy, gets a little healthier, and energy prices come down, and inflation comes down a little bit, and we get another quarter of, lowering inflation, and lumber starts going up, and again, interest rates start going down, and, all of those things. Now you can start to say to yourself, okay, look, our economy's getting healthier, the Feds are pivoting, interest rates aren't going to be continuously raised. Then you can start to really make a case for the market, and making sense that the market's going higher. But without that, and lumber still underperforming gold and silver, it just means your dollar's losing value. People are rushing to metals for the protection of their money. And, our economy's not healthy. And lumber tells you that. It's good to study these kind of things because it helps me make a directional trade and not get shaken out by every single ebb and flow. But if the market pushes way up, I'm under the impression that it can go back lower. All the conditions are there for an ugly move down, after this move up. Because you have to ask yourself, is this the start of a new bull market? Could be. Or was this just a bear market rally? And, it was one of those things that, took a month and a half for this, this bounce to play out. But it also gave the economy a month and a half and, the Feds a month and a half to figure out, hey, are they going to pivot? Hey, are interest rates coming down? Are homes going to start being built? And all those things matter. You want to know the health of your economy. The market shouldn't go up if your economy is doing bad. But again, I try to not keep an opinion. I try to just keep things pretty objective. Everything that is going to go on is, it's not looking terrible at all. Yeah, the home builders isn't looking bad at all. But then the question you have to ask yourself is, the home builders aren't looking bad, but is that just because it was a market-wide rally and, even home builders got pushed higher because they had gotten beat up so much? Or are home builders going higher because they're going to start making tons of money because they're building homes? That's what you got to ask yourself. Are they out there? Are they going to be out there building homes?
CFRX.
Do you believe people are out there requesting homes to be made in this economy? You got to ask yourself that. So why did home builders rally? Did it rally because the economy's getting better? Or did it rally because the market was pushing way higher and everything rallied? That's a question you got to ask yourself. So it's important to study history. Because, it might not repeat, but it definitely rhymes. Like I said, I'm not really in the prediction business, but I do like to study the history so that I can make better informed decisions. Did the market just rally because Apple rallied and Microsoft rallied? And, if that's the case, but our economy is not getting any healthier, then you have to say to yourself, well, what's the reason for the market to actually go higher? Because lumber is telling you that the economy is not getting better. That's what lumber is telling you. If lumber were going up in price, then you'd be like, okay, there's a demand for lumber. Why is there demand for lumber? Well, because the thing that uses the most amount of lumber, home building, is homes are being built. Homes are being built in a healthy economy, not a bad one. But again, I don't really know. Sometimes the market, you think and then the market will do something totally different.
MDEF. AMPX. AMPX. AMPX.
And like I said, I don't like predicting at all, but I like having a solid thesis and then, prices kind of confirming what I believe to be true. So when I think energy is a good short, the question is Is this thing starting to reject on the declining 10 every single time? Is it starting, when I look at the hourly, is it starting to reject its declining, 200 day on the hourly? And the answer is pretty a crystal clear, yeah. Every time it comes up to this area and taps the declining 200 on the 60 minute, it goes lower. If all of a sudden that were to change and this thing starts ripping higher, I might change my thesis quickly. I don't want to just be long or short something when it's doing the exact opposite of what I think it should be doing. It's like, but when I see it breaking down, I like to understand the possibility of why it's doing that, and then have an idea of where I think it can be going. And then, as long as that price is kind of confirming what I believe to be the case, then, you just hang out. Meta's strong, but Meta's a piece of shit. It's beaten up so hard. Its thing is beaten up as beaten up can get. And by the way, like Meta going higher, Microsoft going higher, Netflix going higher, they carry pretty big weight to the indices. So like if they go higher, the SPY will go higher and then everything else will kind of get pushed higher. But you have to ask yourself, like, is Meta really in an uptrend? Maybe on the short term it's been in an uptrend, but like if you look at the year, it's been in a downtrend. So is this just an oversold bounce on a bunch of these names? Is it just a short covering rally on a bunch of these names mixed with a couple people going long, a couple big players maybe flipping their position? Probably. I don't know for sure, but probably. I don't know for sure. And these weed names are incredibly strong.
And Dev.
Tilray. More so. But yeah, I'm under the impression that things aren't necessarily better yet, and what will start to confirm that for me is a Fed pivot and, lumber going higher. Until then, I'm not totally convinced, I like gold and silver, I like metal miners. Right now, they're not acting so well. I'm assuming the dollar's going higher right now. Hardly, but for now. Oh, absolutely. Yeah, that's why I'm not panicking selling my positions. That's why I still own what I own. I'm not totally worried about it. I'm happy to get stopped out. Besides, a lot of these I own much lower before like the market rally really started. Like AEHR I bought. My first buy on AEHR was $22. So we're chilling. Even Lilly, we're chilling. Microsoft, I got a way lower average, so we're chilling. Same thing with Lulu. Like, I'm just gonna hang out. I'm happy to follow my sell rules, majority of the time. So, but my biggest position right now is energy short. So, and that's because, I've got a directional bias. I believe the move in energy is done, personally. So when I look at XLE, I'm sitting there thinking this thing's going back into the 70s. So if that's what I truly believe and price is kind of confirming it for me, then I just got to hang out. And everything else I'm happy to hang out in too. And like really, like I don't size into things so much, that every little ebb and flow, shakes me out. I'm not here to catch, every little 5 minute wave up and every little 5 minute wave down. I mean, that's too much work. I'd rather just have an understanding as for why things are moving the way they are. And then place my chips accordingly. But believe me, I'll be getting much more aggressive to the long side when the market's in a better uptrend, when the Fed finally stops raising interest rates, when, lumber starts going higher, because then, again, that's an indication that our economy is getting better. When interest rates start coming down a little bit or the Fed stops raising interest rates. But for now, there's no reason for me to feel like, where everything's all good and dandy just because the market made a move higher. The market made a move higher because a bunch of beaten up names have been moving higher. Even names like Nvidia or AMD. And a bunch of them, like AMD, is probably up like 30% or more from the lows. Yeah, 35%. It was up 40%. I mean, how much more could you really expect or want from a bounce? So, even if you were somewhat of a swing trader, I mean, I would have been looking to exit some of this after a 40% move. Now it at least needs some sideways. It needs to consolidate a lot longer.
Vax.
But that's why we study, guys, so we can make the best decisions when we take our positions. It's the only reason that you study.
Cough.
This was a good short too. 770s.
STTDF.
A reverse split as a catalyst? No. Guys, ask yourself why it reverse split to begin with. And where the hell is the setup? Where's your tight entry? And also, it's super illiquid, man. Come on. It trades at $1.67, or it trades at $3 and it's 26,000 shares. I mean, please. J trades, don't do that to me. Don't ask me that shit. I know you know better. Don't even be looking at shit like that, man. Save yourself the headache. You know I'm gonna give you shit about crap like that every time, because I like you. It's the only reason I'm gonna give you shit, because you don't need to be playing crap like that, man. That's not how you're not ever gonna make a 7-figure trade there in your whole life. So as you grow, as your account grows, you want to make bigger trades, and you're never ever going to have a 6-figure trade there, or you're not going to have a 7-figure trade there. So, figure out a way, like, again, you're not going to make a 7-figure trade without making a 5-figure trade first, but you want to do that with the least amount of headache, right? Like, how would I make a 7-figure trade with the least amount of headache? It'll never be in a stock like that. How would I make an 8-figure trade? It will never be in a name like that. Just gotta hold here. Dun, 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 dun. Well, a bunch of my positions are pulling back this morning, but they're still acting all right. Interestingly enough.
SXTC. 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 BLEG.
Dun, 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 dun.
Alnec. HTOO.
You're looking at Amgen. I know it was going higher. Yeah, Amgen doesn't look too bad. Amgen actually looks pretty damn good.
XNDA.
Yeah, Amgen looks fine. It's slow. That's the only real problem. You know, I don't know how big your account is, but like, you know, even myself, okay, like, you know, it's slow. So I'd have to take, you know, like 1,500 shares or 2,000 shares, and you know, at that point, it's a $500,000 position. You know, and it's because it's slow. So the real question is like, how much of it are you really buying? Because if you're getting, you know, 20 shares, 50 shares, 100 shares, like it just moves too slow. You know, you'd have been better off buying something like TH. You know, I know it's choppy, but you know, it had a nice little pivot at like a 1250 after earnings. Like you want to be things, especially if you have a smaller account, you want to be things that are a little bit faster. And here's the thing, I like things that are slow because I can size up in them. You know, I don't mind them. You know, green is green, money's money. Like this Visa, I wanted some at 209 because of this weekly chart. I wanted some through these tops right here as it was breaking this downtrend line on the weekly. I just never took any. Yeah, you want to beat things that are a little bit faster if you have a smaller account. I'm not hating on a small account. We've all been there. We've all had one, but if you want to make a little bit better money, you want to focus on things that have like an average daily range of 4% or higher. So, like, okay, good example. All right, you also thought in your mind that XLE was a good short. Well, XLE is kind of slow, so instead of XLE, you'd play ERX, because it's twice as fast, right? Something like that. Yeah, I would pass on something like this myself as well. It's too thin. It's too thin. It's random. It's a reverse split. It's it's pretty illiquid. Couple 100,000 shares a day. It's only $12. If it were trading 3, 4, 500,000 shares a day, but it was 80 bucks, $70, $100. Okay, fine, but it's $12. And today it's traded 25,000 shares, so it's just random. It's totally random. Besides, I don't even know what sector that's in, man. What sector is that in? Is it even a top 20 sector? Insurance brokers? Yeah, it probably is actually. But right now in this market, I only want what I believe are the easiest trades available. I only want the cleanest trades, cleanest setups, if possible, or the ones that make the most sense to my brain, so that I'm not shaken out by every single little ebb and flow. And that's why short energy is my biggest position. I keep repeating it. It's there's a reason for it. Versus even if the market's going higher, energy hasn't been following. So I literally only want to be in the things that make the most amount of sense to my brain as to why they would be moving up or down. Yeah, exactly. Yep. And I also want to make big trades, man. Like, I'm not, I don't have the same kind of mentality as everybody else. Like, $1,000 day is great. $2,000 day, $10,000 day, those are great. And I see guys day trade for that stuff all the time. But I want to make 7-figure trades. I want to make high 6-figure trades, and there's only really one way to do that. It's with patience. It's with position sizing. It's with having a strong directional bias, but price kind of confirming what you believe. I want to get to that point where 7 figures is something that could be common for you. Because it only then takes a handful of trades a year to have an absolute stellar year, but studying history is important in the stock market. It's what allows that to happen.
Alice.
Not necessarily by swinging for home runs. The bigger your account gets, guys, if you end up getting, like, for instance, if I were short, if your account was big enough, and you're short, 20,000 shares of, ERX, for instance, and you're short at 72, and you have 20,000 shares, we'll move down to, and I believe ERX will come down into the high 40s. So it's like, if you're going to get a $30 move on 20,000 shares, or a $20 move, that's $300, $400, $500, $600,000 on a trade. So it's like, but you have to have a directional bias as to why you think the energy move is done. Like, you have to be able to rationalize it in your brain. And if this thing's ripping higher, I'm not just hanging out in it. I'm not just watching this thing continue in an uptrend. It's like I'm shorting it because it's in a downtrend, or because the market's bouncing and energy refuses to. So it's like, having an understanding as to why, seeing the big dislocation in crude versus energy. Again, if you guys studied a little bit more about what an arbitrage trade is and how you trade them, you'd understand, hey, maybe you should be long crude and short energy. But I believe crude's going to come lower, and there's already a big dislocation there between crude and energy. So I just want to be short crude. I don't really want to long crude. I just want to be short energy. But again, these are all things you guys kind of got to, study up on yourselves. And when you stare at the hourly and the daily chart and everything moves so much slower, your brain has a chance to think about it. When you're just staring at these 1 minute candlesticks or 5 minute candlesticks, your decisions have to be so quick. You're not going to get yourself into the $2, $3, $4, $500,000 winners. Because if I put on 20,000 shares of ERX and it's down a buck or two, you're like, ooh, I'm up 40 grand. But it's like, okay, you're up, the trade's working in your direction, but why is it working in your direction? How much further can it go? Do you believe the move is truly done? And then, as it really begins to work for you, that's how you're going to catch that $20, that $30, that $40 move. When energy dumped here, it went from 80 all the way down to 40. It lost 50%. Imagine a $40 move on 20,000 shares. There you go. It's almost $1 million. So you don't have to have necessarily massive size. And then swinging, you never go for home runs. You just size properly and let time pay you. But if what you believe is coming actually shows up, then that's when you have a nice outlier trade. You have, that one massive trade, the two massive trades. Like, you only need a handful of them a year. Like, you don't intentionally swing for a home run. It either you swing at the ball. If the ball goes out the park, well, that's because you saw the pitch and you swung hard, and it ended up working. I really never try to do anything that's out of my comfort zone. I stick to what I know, and I just kind of repeat the same thing over and over and over. And eventually your trades just get bigger with time. But you can't do shit randomly. You got to do it with there's got to be clear reasoning behind everything you do. The NPH acting well. Solar's not bad.
EPAZ.
Sedge, nice.
EPAZ.
Yeah, I couldn't touch it. Lee's up too much as well. I mean, I wouldn't have I wouldn't have touched it. It could easily work, right? This could easily be a higher low on the daily, but there's nothing clean here. You know, if you were gonna take it, it would have been right in here as it gapped up in the morning, right over these tops. You'd have been buying it right in the low 20s, but nothing here for me personally. You know, you start thinking about all the other China names like Baba. You know, Futu. You know, they're up a bunch. Like you want to own Lee after Futu's already made a. You know, it's up 130% and it was up 150 this morning. Like, is that really what you want to do? Like, Futu really's got to pull back some more and consolidate longer, probably for like another couple weeks, realistically. So, you know, if China names just chop around for the next 2 weeks, you're going to be sitting there in Lee just getting chopped around. That's not to say that they don't eventually want to go higher, but you know, I want to catch the move as it's happening. You know, I don't want to get caught getting chopped around, and that's exactly what could happen right now in these China names. Just get chopped around. Unbelievable. PXS. Wow. I had a thesis on this PXS down here at 240. You know, because I saw INSW and STNG, and I was like looking at all the other companies. It's just too thin for me to do anything. It's trading like 20,000 shares a day. But had it been thicker, I would have taken 60,000 shares down here ish. Really nice move. But yeah. It's BTU, man. Come on, hold the 100. Hold the line. Yeah, BTU is the only coal name I'm in. I wanted to be in CEIX, but it never really gave me an opportunity. Never gave me anything clean. Maybe on the second day it did, right in here. Right over these these little tops right here. Like right over this little top and this little top. So somewhere in here would have been nice. 63s, 63 and a half on 11/22. But yeah, BTU is the only coal name I'm in. And you've also got AMR. It looks like it may be breaking down too. You know, these things have already made massive moves, and usually you want things to tighten up. You know, like look at how nice and tight this chart is down here. You know, look at how nice and tight things were, you know, right in here. You know, look at how nice and tight things were right in here. But, you know, but things have gotten really wide and loose. Things have gotten real wide and loose. There's nothing really tight about this chart. Take a while to tighten it back up. Look, for a smaller account, you should have been playing RLX like I did. That's what you needed to be playing. Like I bought RLX on this day, 20,000 shares, $1.80. And I could have easily taken way more, but I didn't. Right? Here's a move up, and then what did it do? Pulled back, higher low, move up, pulled back, higher low, moved up, pulled back, higher low.
Okay, and then it had that 180 top from that day. It had big volume. There's your breakout right there. And I literally had it on 11:23, and I had limit orders at 240. Basically, in my mind I was like, okay, this is gonna come up to the declining 200. So the other day my order got hit right in here. Sorry, right in here, and I was out of the trade. Yeah, even though I missed out on another 60 cents, double the amount, didn't really matter to me. $1.80 to 240. Nice little move, percent wise. Nothing crazy, but 30%, and I was out. RLX would have been something for you. Yeah, I didn't have a lot of shares, but it was like over 10 grand trade, so it was nice. Could have been 20 grand had I been a bit more patient. Yeah, you could have bought it on 11.29 or 12.1. Yeah, 12.1 at 5 cents, and it triples in 3 days. Today would have been a great day to take almost all of it off the table. 3-day move, it tripled. I mean, you should have been out everything basically here. Like 75% of your position should have been gone. And then you're just trailing on the 10 or, on an hourly time frame. This 10 on the hourly. XOM looking like shit, which is good. The shittier it looks, the better. I'm thinking this thing gets it goes sub 90 and gap fills down here. That's kind of where I'm targeting. 89. About $20 move from here. XLE finally fading for me. And it's not like I have massive positions in any of these. I mean, they're big dollar-wise, but, share-wise, I'm not really too stressed about it, honestly. Especially XLE. It's kind of a slow mover. But yeah, now it's just a matter of sitting because I don't really see anything. Yeah, I wouldn't have touched this either, man. J-Trades, stop looking at names that are so illiquid, bro. It's traded $300,000 today, man. You need to learn to sort through your names by dollar volume. Dollar volume so important. I mean, you're looking at names that have got nobody interested in it. If I come in here and buy 10,000 shares, I'm going to rocket this thing 40, 50 cents. I mean, that's not ideal. Versus some. Okay, so think about it. At this point in the day, XLE is traded $640 million. Okay? That CGRA you're talking about has traded, 2 million or what was that other one that you just mentioned? West? Yeah, it's traded 300 grand today. 300 grand. All right, and XLE is traded 640 million. Where do you want to be? Where's the money? Whether it's leaving or going, or whether it's coming in or leaving, where's money at? You know what I'm saying? You want to be where the money's at. That's how you make money. You want to be where the money is. Follow the money. Whether it's leaving or going, where's the money? Focus on dollar volume. XME traded 71 million today. DXCM 60 million today. Lulu 204 million today. Microsoft $1.3 billion already gone through Microsoft in an hour. AEHR 8.5 million. You know, Lilly 202 million. GFI 20 million. You know, XOM almost a $500 million gone through the thing today. 420 million right now. You know, BTU 23 million. You know, BBW 2.8 million. You know, that one's a little exception right now. It's also pretty light right now. It's only traded 108,000 shares. But again, every single one of these is more liquid than the names you're looking at. That's where you want to be. You want to be focused on things that are where the money's at. You know, BABA, it's traded, you know, $1.6 billion today.
Oh,
Déjame yo bajo ahorita. Yo te dejo entrar. Ya bajo.
sí, gracias.
Otra, trata, ¿cuál fue el código que trataste? No, trata 3022, pero ahorita bajo el nivel. Ok. ¿Alguien salió pero no pudiste entrar? Ok. No, está bien, yo bajo.
STRT. BYSI. WWAD. ICD. ARCT. Strut. LNSR.
Ella sí, como organiza más, o sea, como las cosas deben de, dónde las cosas deben de estar. Sí, sí, ella colgó todo, las fotos y todo. Sí, ¿verdad? Más lleno, como más como una casa más organizada. Ya. Oh, ¿tú estuviste allá?
Torque.
Yeah, man, I'm Puerto Rican Colombian. This XOM's acting great. It's acting great. Here goes XOM too. These things are starting to dump a little bit harder. CVX below 78 too should start to move pretty fast as well. Crude's taking a spill this morning, no pun intended. SPY building some higher lows, pretty interesting. ES holding the 200 and the 10, interesting. Yeah, SPY's looking better. It's holding up where you'd expect it to. Gold took a dump this morning. Natural gas, oh man, natural gas coming down pretty hard, huh? EMPH acting well too. Yeah. Yeah, I like that this array is going sideways too. It's basically going sideways if you look at the weekly. Interesting to see what this thing does over 2350. XLE rolling over perfectly. No, I haven't read the life cycle trade. Mm-mm. But I am familiar with the book. The only books for trading that I've read are How to Make Money in Stocks by Bill O'Neill. I've read all three Minervini books, and I read Market Wizards. I've yet to read like Reminiscence of a Stock or Remnants of a Stock Operator, or I haven't read. And I also read Stan Weinstein's book about stage analysis. Probably one of my favorite books, honestly. About stocks in stage 1, stage 2, stage 3, stage 4. It's important for you guys to know that one as well. Yeah, is it? Yeah, I'll have to give it a go. This weekend, while I was in Texas and traveling, I jumped into the second book of Stock Market Wizards. Yeah, Stan Weinstein. Mm-hmm. Yeah, I highly recommend that book. He talks a lot about stage analysis. The book is so Secrets for Profiting in Bull and Bear Markets. Stan's arguably one of the best traders of all time as well. So, guys who have been trading in the market 20, 30, 40 years, you want to listen to what they have to say. They've survived the times,
HLLPF.
Man.
HLLPF.
Yeah, maybe AMAT's still in a range. Still in this range here.
EMET. EMET.
Still in this range. But maybe.
EMET.
They don't look terrible. Tell you that. I mean, it's flagging. PXS, man, unbelievable. Yeah, AMKR is a nice flag. Yes, it is. But for now, I'm passing. I'm pretty much all setups right now. Market's got to prove itself a little bit. You know, it's made a really nice move up since October. And, you know, we're long a few things already that are working well and have been working well and still look good, you know, like this Microsoft and Lulu and DXCM. So I'm in things that are going up. And if the market goes up, these will continue. But, you know, I'm not going to get hyper aggressive today. I mean, there's just no reason for it. You know, guys, if October low was the low in the market for good, at least for like the next 12 months, we're going to have dozens and dozens and dozens of setups. So there's no reason to get aggressive today. You know, especially not after a big move up and, you know, without building out a little bit more of a base. And, you know, when I look at the ES, which is the futures market, again, guys, just some really simple lines will tell you. Here's your downtrending line, right? You can just draw it like a 5-year-old, exactly like I did. And then, you know, it bumped right into it. And then you've got this other little wedge, you know, bumped right into it. And what did it do? It rejected. No, it's above the 200. It's holding the 200. If you look at the hourly, it's holding the 200 on the hourly, but there's no reason to get aggressive. The market's not really going higher today. The market's actually going lower today. And it's been going lower ever since it bumped into that declining trend line on the daily or on the weekly. Bumped into it. It wicked back. Now to start the week, it's putting in a red week. I mean, so far. So there's no, if the market is truly in a new uptrend, we're going to have dozens of opportunities over the next 6 or 8 weeks to, get long and put all of our money to work in the portfolio.
So there's zero reason to get aggressive today.
Absolutely zero. EMPH worked well on Friday and it's holding up today, and sometimes stocks break out right before the market's done bottoming, and then as the market is pushing higher, EMPH would continue, for instance. But, just getting aggressive today doesn't make tons of sense to me. Market's got to do a lot of proving. And again, what did I talk about this morning about the relationship of gold to lumber? Guys, lumber's not performing well. If lumber's not performing well, I'll go back and say it again. If lumber's not performing well, our economy's not healthy. Our economy, people's wealth is tied to their homes. If lumber's not performing well, it's because nobody's buying homes and also because interest rates are high. That means an unhealthy economy. An unhealthy economy should not mean a healthy stock market. Just think about that. With your guys, you guys are all smart. You guys don't need me to tell you that. If I tell you that homes aren't being built because our economy is unhealthy, then you guys think we should have a strong stock market? Is that your guys' true belief? Not to mention the market did a great job bouncing, and we took advantage of a few things. It wasn't perfect, it wasn't great, it wasn't life-changing money, but, we took advantage of a few things. I took advantage of a few metal miners. I took advantage of AEHR and, Lilly. But I'm not here to tell you guys that the market's in a brand new uptrend, because all that was to me, for now, was just a bounce into the declining moving averages. That's all it was. That's all that happened. Oh, crude. Baby. This thing looks like ass. And crude's rolling over hard. Don't know if and when it's supposed to bounce, but I don't know if it will. But yeah, I'm not gonna get aggressive today, guys. I'll talk about it till I'm blue in the face. We need setups, and things are extended. So, and I'm not looking to buy dips. I'm not looking to buy dips, only under certain circumstances. Yeah, I'm gonna trail my short like I would a long. At first, I think the move in energy is done, period. So I've got a target in mind, which is 89 for XOM. I think it gap fills down here. This entire time on the way up, this thing's been respecting the 200. And if I truly believe that the move is done, then my expectation is that eventually it breaks below the 200. And it's got this gap fill right down here. So I'm targeting 89. But yeah, of course, like anything, I will use, trailing stops. And I'll slowly, move my stop. And, when you look at a smaller time frame, the 60-minute, what did we notice? While the market was rallying, this thing kept declining or rejecting the declining 200-day on XOM. Every time it came up and touched it, basically, it refused to close above it. Every single time. So for now, I'm just using the 200 as my stop. But as it starts to, if it breaks down further, I'm using the daily. I mean, the daily moving averages are now above my average basically, or below my average, above, below, whatever. So essentially, even if this thing came and closed above the 10 on the daily, I would basically be flat on the trade. But it's starting to work well, and I have zero intention of covering anything because I think the move is done. It's my own opinion. I don't expect people to follow me down that rabbit hole or share the same opinion or sentiment, but it's how I feel.
LVTS.
But yeah, I will. And guys, if you guys have been following me long enough, you guys know that I'm not big on shorting. It's not really one of the ways that I typically profit in the market. But it is good to have an understanding and no bias. It's good to have no bias.
NBLD. NBLD, NBLD, NBLD. VQS. NBLD. 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 CCEL. NAOV.
EMPH acting really well. EMPH is acting like a monster. Market's going down, EMPH is heading up.
BNKL. BNKL. RIDA. MTIC. PSS. PSS. BNKL. Higher. CUBT. APCM. CNKL. Emma. APM. PNICL. EUSC. BNKL. CSEDD.
Yeah, things like Amazon don't look good.
LGSLF. Terra. ETIQ. NAUT. YMTX. NETI.
No, I'm not. I'm not looking to buy a breakout right now. I want to buy breakouts when the market's pushing in my favor. And today's not that day.
NDAF.
Market's going
NDAF.
lower. EMPH looks great though. I mean,
CBIF.
it's acting incredibly strong. You know, market's going lower, right? And EMPH is going higher. I mean, so EMPH is screaming that if the market were going higher, EMPH would be moving even better, in my opinion. But I'm not looking to buy any of this. And I didn't want to buy EMPH on Friday because of the gap down. You know, because then I would have been using low of day as my stop. So basically 309, and I would have been buying at 324. So a $15 stop, and if I bought even 500 shares, I wasn't looking to risk $7,500. So no, I'm not looking for any breakouts right now. I want to do breakouts when I believe the market's much healthier. And you know, again, I just got done explaining about the ES, which is basically the SPY. It's the ES is the futures of the S&P 500. So if you just look at the ES, it bumps into this declining trend line, and what does it do? Every single time, it hit this declining trend line and rejected, came back up to it, hit it, rejected, came back up to it, hit it, and for now it's rejecting. Now, I'm not saying that there aren't a bunch more setups out there, because there are, but you guys also have to understand history. You guys have to understand the relationship between, lumber and gold and, all the other little underlying pieces that would help you make a better decision, right? This hits this declining trend line. And, again, lumber isn't doing better. So, and lumber is one of the most and best and accurate leading indicators of the health of our economy. So if you don't believe our
LGSLF.
economy is better, if you don't believe that, housing is better, where people's net worth is tied into, so if the economy sucks ass, right, and it isn't getting better, and people aren't buying homes because of interest rates, and you know our economy is not getting better, why would the stock market get better? I'm not saying that it can't, but I'd like to see a bid in lumber. I'd like to say, okay, lumber's, starting to catch a bid. That means some people are starting to buy homes. That means some people have money. It means inflation's coming down. Maybe the feds are done raising interest rates and the real rates begin to come down. And, those are all bullish things for the market, and our economy's getting healthier. Inflation has peaked, and, interest rates are coming down, and new homes are starting to be built, and all these little factors, but it's not. It's like lumber's not going higher. So your economy's not healthy. So if your economy's not healthy, why should your stock market be? This is just a bounce. This is all this is. This is just a bounce, just like this was back a bounce, and this was a bounce back in March, and we've had bounces, but that doesn't mean I want to start getting long a bunch of shit. I mean, that's just yeah, exactly. My risk reward isn't there. It's not. I'd rather look for the more obvious setups, which is I explained. I hope you were here while I explained it. Why I was short energy. It's because of the massive dislocation between crude and the XLE. You look at the crude futures, and then look at XLE, and look at how well they tracked all year long, and then somewhere in there they diverged pretty hard. And you have to ask yourself, why? And then you have to ask yourself, do you believe that these two charts are going to come back together? If you plot them next to each other on the same exact chart, you would see that there's a big dislocation, and, there's profits to be made in that dislocation. You just kind of got to, know which direction, that the charts are going to head in. And you got to, do it sized in properly, and with the proper thesis and proper size, and healthy risk reward. Yeah. Oh, good. You've been short of Zom a few days now. Hopefully you were listening to me a few days ago. I was talking about Zom short when it was in the 111s, mid 111s. So yeah, I want to take advantage of that divergence and expect there, for those two charts to meet up again sometime down the road. Hey, I could end up being wrong, and then I stop myself out for a small little, small loss.
PLXP. CMND. PLXP. JADL. OPHC. CTSO. INBS. BGTTF. MPC, INTC. NLTLTS. FNHC. SATX, NLTSCN. LBTX. LMB. PKPH. CEAD. Morse. HMR. SCDFF. BOSR. CPHI. ASRT. CADO. CPHI. Adil. NXATA. MGAM. PRPH. SASR. CMND. HPCO. NLTX. SSSS. NYC. Adil.
Da,
DPSI.
da, 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 da.
NYC. Soma. WWR.
Does anybody see anything cool happening out here? Because I don't. Anybody? Anybody?
PSS.
I hope some of you guys are making money on this short too. Honestly.
CPSS, FTHL,
I'm not looking to buy the dip on anything, not metal miners or anything. I'm looking for breakouts. Dip buy setups are fine, but I'd want to buy it as the stock is turning back up through a key level, some sort of pivot. Maybe the stock pulls back to a key moving average and begins to build higher lows on a smaller time frame, something like that. But again, I'm not really looking to long anything right now, guys. And I spoke about why. Our market, this could have very well just been in an oversold rally, and every single time this thing hits this upper trend line, it rejects. And it's doing that right on cue. And I don't believe our economy is any healthier. So until something changes on the macro, these are just potential shortable rallies, or, our market will get healthier. More setups will start to work, more breakouts will start to work. Inflation starts to really peak. The Fed stops raising rates. Lumber starts to get a bid. Guys, that's my number one indicator right now is the health of lumber. And if you guys don't understand why, you guys need to do a little bit more studying on, on that. And again, setups are the only thing that matters. If I see a clean pivot and it breaks and it's got volume and it's in the right sector and, and then it goes, and then you see that a handful more times, well, then there's something going on in the market internals where, the big boys are putting their money to work, and I won't miss the train. But again, guys, the market potentially just bottomed in October, and that could very well be the real low, like the new real low. And if that's the truth, a bull market will last 18, 24 months. So, if we're going to trend higher or build higher lows and trend higher for like the next, until 2024, well, great. We're going to have tons of opportunities to put our capital to work. But, this is just one day in where, the ES is hitting that upper trend line and it's rejecting, and it's kind of doing exactly what it's done every other time it's hit that upper trend line. And again, lumber is still not healthy. So, why would I believe that this is going to break that trend line and continue higher? I don't necessarily have that feeling. My feeling is that this thing just wants to go lower. And again, lumber's my indicator. Lumber's my personal indicator. I mean, that took a lot of studying to figure out why. But yeah, I want to make directional trades, and right now the direction of the market is not up. A handful of things will go up and stay up, but they're far few and in between. They are far few and in between. So there's no reason for me to get, crazy about buying a bunch of shit. I mean, it's just not necessary. I'm not looking to buy a dip, because you could buy a dip and it's holding against like the 20 on the daily or something, and then the next morning it gaps down hard. No, it's not really what I want to do. I want to buy it as it's turning back up. I then want to have a little cushion on my position as it's working, and then and then be able to sit comfortably in my position overnight. I didn't really worry too much about these energy names because they showed their hand already. You know, when the market was rallying, XOM couldn't even fill its gap. You see this thing gap down? You know, it couldn't even fill the gap back up to 113. You know, and the market was absolutely flying all last week. So, you know, energy told you all you needed to know already,
FTHM.
and that's why I'm short.
FTHM. MKTW.
But yeah, there's nothing here to start running to. You know, I don't, like I've said before in the stream, I don't go to the grocery store and say, all right, babe, what do we need for groceries? Okay, we need watermelon, we need bananas, we need avocados, and then all of a sudden, all that's there are mushy avocados and brown bananas. I don't just go buying bananas because I wanted bananas, but they're brown. No, I wait until my bananas are perfectly yellow and beautiful and ready to come home with daddy. You know, I don't just buy bananas because I need bananas. You know, I don't just buy stocks because I need to own some stocks. I mean, that's not how I operate. You know, I wait until my merchandise is, you know, just because you go to the store doesn't mean there's anything on the shelf. You know, and right now there's nothing on the shelf. You know, I want easy money, and if easy money's to the short side, then you know, that's why these shorts are my biggest positions.
AURQF. CPHI. PT. VHI. APOS. NMMB. Volume. PSS.
You know, and I feel like, you know, what I just got done saying, you know, that's something that, like, you know, all of us should live by. You know, there's always going to be opportunity in the market. You just got to be patient for it. Whether it's long or short. And again, I suck at shorting, guys. It's not something I typically do. Shorting is not usually in my, it's not my bread and butter, as you'd say. But, you know, when stocks scream, I listen.
Golf.
You know, and if they start screaming that they're going lower, well, then you better believe I'm paying attention. XME might stop me out break even. Maybe even for a little red. That would suck.
TTLHM. The talks. PFSW. Wolf. Sense. Electricity. CLST. Cost. Asme. ERTS. KVHI. SSGC. FTHM. YMTS. NIMU. YMTS. CLDS. SHSW. OSBCC. Ronnie. ECG. KMTK. ESIG. Send. Farm. ESIG. Farm. WISA. KVHI. ISSM. CCEM. UTT. CNT. Steps. WISA. FSCWY. KVHI.
Well, if you guys aren't seeing anything interesting, I'm not really seeing anything interesting out here either. You know, EMPH is one of the stronger charts out there, but obviously I don't see an entry on it, so kind of just a pass for now. I don't really see a whole lot else to do here today. I don't really see a ton. These names like a Gap and American Eagle, I mean, they're just some of these clothing names are acting pretty damn well. I guess people still need clothes. Turns out. But if you guys aren't really seeing anything, I'm not really seeing anything either. So with that, I'm gonna call it a day. I'm gonna just kind of monitor what I own, and we will see you guys tomorrow. Hopefully, a few of you guys were able to take advantage or are taking advantage of, you know, something like ERX or XLE or even XOM. But don't feel FOMO if you're not short any of this. I don't expect you guys to be good at shorting or even wanting to short yet. Remember, with the short side, there's a, you know, things can only go down so far, so the moves are limited. Versus, you know, being long something can go up, you know, for forever and then squeeze even higher. So, you know, don't feel like you guys are missing anything if you're not short. I don't really expect a lot of you guys to be. So, you know, just stay patient. Like I said, if this is truly a new fresh bull market, we're going to have tons of opportunities over the next, you know, 3-6 months to really, you know, make a dent in your portfolio and push it up higher. So, you know, or should I say make good progress in your portfolio. But until then, you know, guys, stay patient. And I promise, you know, we'll do a good job of finding all the setups and all the names, you know, we need to be in. But for now, you know, stay patient. Stay patient. Now, this 4 is interesting, man. This 4 is really interesting. It's a really interesting chart. Holding up well, big accumulation volume on this right-hand side, pulled back, higher low. You know, more accumulation volume on the right-hand side, getting up above all moving averages. You know, recent IPO. It's not an old, you know, it's not an old name. It's a fresh IPO. You know, less than 3 years old. You know, way less than 3 years old. 2 years old, even, you know, less than that. A little over 2 years old. So, could be one of those names that ends up going to double. But guys, until then, enjoy the rest of your day. Don't do anything crazy. And oh yeah, yep, ERX is hard to borrow. Yes, ERX is hard to borrow, and because it's, you know why? Because it's faster than XLE. So of course it's going to be hard to borrow, right? On the short side. What does that tell you? When something's hard to borrow, means that a lot of those shares have already been located, or a lot of them have already been located, and you know. Who do you think's locating all these shares? You think it's retail traders like myself? You know? So when something's hard to borrow and it's a name that's extended to the upside, why do you think that is? You think it's guys like me have been borrowing so many ERX that you can't get any more? No, it's definitely not. It's the big boys. So, but I did notice that as well. But anyway, guys, I will see you guys tomorrow. I hope you guys aren't feeling any kind of FOMO. I tried AA this morning and I got stopped out right away. So I tried AA first thing this morning and it didn't work. So I took about a 40-cent loss on it. No big deal. But, you know, it could come down to this 100, bounce again, exactly where it found support these last couple days, you know, tighten up a few more days and go. Or it can just continue to fail. I mean, I have no idea. But I tried one long trade this morning and, you know, didn't really work. But, you know, for now, guys, we just stay patient, let things shape up how they're supposed to. And, you know, like I said, if this is truly a new bull market, we're going to have plenty of opportunities. But again, until the data shows itself as a new bull market, then, you know, believe me, guys, I'll scream from at the top of my lungs that I believe we're in a brand new uptrend. For now, I believe that this was just a bear market, you know, with a bounce. You know, it's still a bear market, and we just had a bounce. That's all I truly believe this is. You know, and there are names bucking the trend. You know, DXCM's one of them. That's why I'm long. You know, AEHR's been bucking the trend for months. That's why I'm long. You know, Lily's been bucking the trend for a while. That's why I'm long. You know, there are spot things. You know, Lulu. You know, I got long a few days ago. It's holding up well. So there's a reason. You know, I'm long a few things, but it's spotty. It's, you know, I'm not super aggressive. And, you know, my aggression is coming on the short side. So just going to show you, you know, what I truly believe, you know, is happening under the surface. So, again, guys, I'm not here to, you know, predict. I'm here to follow price action and, you know, try my best to understand the bigger picture and why something's going higher or why something should go higher versus lower. And, you know, trying to use the two brain cells and eyeballs God gave me to make the best decisions that we can, so, you know, we can be successful. But yeah, guys, I promise I will be screaming every single great setup that looks great and that goes on to work. You know, I will make sure I point it out, and I'll let you guys know when I believe we're truly in an uptrend. And, you know, things can change quickly in a couple of days, you know. So, and if things do change, you guys will hear me mention it. So don't be afraid. Don't feel like you're missing anything. You know, the most important thing still at this point in the market is still protect capital. You know, protect your capital, protect your mentality, protect your, you know, your emotional state, because, you know, we don't want to just chop ourselves up so much during these periods in which the market already made a big move from 350, right? So I don't want to get aggressive with the intention that the market has to go higher, because I don't believe it has to. You know, our economy is not healthy. So, you know, for me, that's the biggest indicator. And, you know, I'll continue to be patient for things to develop or for there to be low-risk entries or low-risk setups. And right now there aren't too many. So there's no reason for us to get excited or down or, you know, emotional in any one direction. But we'll follow the money. You know, we'll follow the money, whether money's leaving somewhere or whether money's going somewhere. It's important for us to know what's happening in these sectors, and then, you know, we make our directional bets at that point. But for now, we just hang out. We got, what'd you get? GCT? Let me take a peek. Happy to look, man. You bought it $746 on Friday, $840 now, and you took off a third. Love it. $746. Oh, perfect. Very nice. Over the previous day's high. How would you know to buy there, Sly Dog? Nice work. Except, again, By the way, this shit's a liquid too, just so you know. It's only traded $2 million today. But you love these illiquid names. But it's cool. Earnings got out the way. It pulled back on lesser volume, found support on the rising 10 and then took out that previous day's high on 12-2. It's totally fine. And then you got what, like a 10% move and you trim some? Beautiful. You got over a 10% move and you trim some. So far you've traded this trade like an absolute stud. So I got nothing negative to say about that one. You bought it at the right spot. It did the right thing. It pushed up, pulled back, found support, took out then the previous day's high on the day you bought it. You've done it right. You did right. It wasn't a trade I could take because it was too thin, but nice job. ORMP. I wouldn't have touched this one personally, but that's fine. Another one that's pretty illiquid. You love these illiquid ass names, man. What's wrong with you? Oh, you got a fat 15 shares? Careful, man. You might catch major slippage. Either way, though, you're buying them at the right spot. You're buying them at the right spot, and that's kind of what matters most. I wouldn't personally take it at $9. I mean, I don't see a clean pivot. If you draw a line here, where's the spot? That doesn't seem like the spot. What seemed more like the spot to me was over all these tops on the daily. Right there, 847. I would have drawn that right there on the daily, personally. That's where it broke down from. It came up right up to that level, broke down again, came up to that level, broke down again, came up to that level, broke down again. Finally broke through that level. That's when you would have bought it. When it finally broke through that level on increased volume. Yeah, 857 was cool too. 857, 860. Yeah, that's totally fine. If you drew your level at 857 because of 1129's high, you'll see how it reacted. Not only did it break through that level on increased volume, then it pulled back and it held that level. That's totally fine. Previous resistance now becomes support. And that's fine too. But up here at 9, I mean, I don't personally see it. I think your 857 level was even better. But look, that's not to say it can't go on to work, because somebody just did this. What is this? This TME trade, at $6, and I didn't think it looked perfect either, and it worked great for somebody. So, oh yeah, that was you too. Yeah, there you go. You love those fucking names. But what's the difference? Look at the volume on TME, man. This thing at that time, like even today, it's traded over $100 million. I mean, completely liquid. Like if I wanted to buy something like this and buy 20,000 shares, it would have been no problem. Buy 20,000 shares on the hourly candlestick where it traded 3 million shares, basically. Yeah, not an issue. Yeah, a lot more volume. So you won't hear me give you so much shit about it because there's at least some buyers there. There's some real interest there. There's some real volume coming in. Buying all that other bullshit you're looking at, well, it's exactly that. It's a bunch of bullshit. But, buying something that's trading, $100 million a day versus $5 million a day, like that other crap you were looking at, there's a big difference there. Huge difference. And, I'm happy that you at least noticed the difference yourself. But you understand when you get volume, that's the kind of move you get. You get a 20% move in a handful of days. Is that what you got? Yeah, 25% move in 5 days. I mean, so you just take it for what it's worth. I'm not here to tell you what you can and can't buy. I just want to help you so you make the best decisions and you do it with the least amount of stress, man. I'd like to see you be rich. I'd like to see you get rich someday, really rich. But it ain't gonna happen trading a bunch of bullshit, illiquid crap. Asking the market for a favor. Market doesn't give out favors. Gives out gifts every now and again, but you can't ask it for a favor. So anyway, brother, I will see you tomorrow. It's nice to see all you guys in here. It's a nice 3-hour day, and guys, don't be in a rush to own shit. We don't go to the grocery store and buy brown bananas, and we're not going to buy crappy stocks either. So we want to do it in a healthy market, and so far, the market's just been in a bounce, and it does not mean it's an uptrend. So it just means it bounced from the lows. So till tomorrow, monitor what you own, and like I said, if this is a true bull market, guys, we're going to have hundreds of setups. We're going to run out of buying power really quickly. We're going to have to be extra selective on what we own, why we own it, where we own it. Like, we want to own the fastest names and the best fundamentals and the best group. But right now, it's just a bunch of random shit popping off. It's a bunch of these beaten up names popping off. So right now, it's just a bunch of bullshit. So until it's an easier dollar environment, believe me, you guys will hear me scream about it, and we'll be ready to act when the time comes. So guys, until tomorrow, nice to have you guys in here, and nice to be back from Texas. We will see you guys again in the morning. Enjoy the rest of your day.